What is a short sale? A short sale is selling a house for less than its existing balance on the mortgage. Now, to do a short sale, a lender has to agree on accepting your mortgage amount, which is less than the sale amount. So why am I talking about short sales right now in August 2020? We haven't had any in the last 6, 7, 8 years, and we may not get any, hopefully not. But just in case there are short sales coming, I wanted to give a basic idea on what to do on a short sale, or what the process is. The best way to explain a short sale is to give an example on how, when selling a house via short sale, a bank may accept your offer, they may not. The first thing for a bank to even consider a short sale is that the seller has to have a proven hardship. Now, in the bank's eye, what is a hardship? The first hardship is you must prove that you have a financial hardship. The second is you may have a medical hardship. And the reason you do a short sale is because obviously you are unable to pay the mortgage. Maybe the seller had a job loss or a loss of income. Maybe there was 2 income and now only 1 person has income. Or there was unexpected expenses and you cannot pay the mortgages. The other issue is a medical issue where you cannot work anymore. So obviously you don't have any income. So again, to do a short sale, you must prove hardship. So the best way to explain a short sale is via an example. So let's assume a seller bought a house for $1 million and his loan amount when he bought the house was $900,000. Over the years, the property appreciated and the seller decides to refinance. So let's say the property appreciated to 1.2 and for some reason the seller decided to refinance and take out some cash, what we call a cash out refinance. You might have pulled the cash to do remodeling or for your kids' college or to buy another property or to buy another house. Whatever the reasons is, let's say you pulled out $100,000 and the property was appraised at 1.2. So you bought it for $1 million whenever you bought it. Today or in the new market, the property is worth 1.2 and you refinanced and now your new mortgage is $1 million with the cash out refinance. For some reason there's a job loss or medical issue and you have to sell the property. And let's also assume that the market came down from the last time you refinanced. So maybe the property is worth only $900,000 now. So there's a dilemma. You owe $1 million to the bank. And of course, I'm rounding up these numbers. There's always up and down numbers because you have been paying mortgage, so it won't be exactly $1 million. But let's assume you owe $1 million. The house value has now dropped to $900,000, maybe because of the condition and the market change. So there's a difference of $100,000. Plus, when you sell a house, as you know, there's other expenses like commissions, escrow fees, title fees, termite fees, notary fees. All those add up to $40,000, $50,000, $60,000. So let's assume that you want to sell the house for $900,000 and it's going to take you are short $150,000 with the mortgage amount difference and the expenses. So you have to talk to the mortgage company. You have to prove them hardship. And if they accept the $900,000 and allow you to sell the house, the bank or the mortgage company will pay for the $150,000 expenses and difference in mortgage so you can sell the house. So that's how you do a short sale. The lender agrees on the cut amount that they get. So that's what a short sale, how it works. Obviously, if you're thinking about doing a short sale, I would highly recommend that you talk to your attorney or your accountant and get professional advice because each individual short sales are different. Also, if there is a second mortgage, let's say you refinanced through a different refinance and then you took out a second loan, a home equity line of credit or a second mortgage from a different bank. Now everything changes. Now you have to deal with 2 banks versus 1 bank or mortgage company. So it gets a little bit complicated. By the way, if you need any help or have any questions or need any resources, my name is Mike Patel. I'm a CDPE certified, which is a certified distressed property expert. I have the credentials and have done many short sales over the years. In fact, the last one I did, which was 2 years ago, because right now there are no short sales, I did one in Fullerton and the bank accepted the short sale. The sellers in that case were getting divorced. They both had medical issues and they were upside down $200,000 and the mortgage company accepted that. So thanks for watching the video. I appreciate you watching it. Please also subscribe.